Doc, good morning to you. So we have a rates decision today. Is it still a question of whether or not there should be a rate cut, or is it by how much?
It's exactly the second. It's a question of how much and how bold the Reserve Bank will be in recognizing that these are unusual times. At the same time, it's really almost a no-brainer. The global coordination among central bankers so far has meant that nearly all the major banks, such as the United States Reserve Bank, Bank of England, and so on and so forth, they've all really cut the rates almost to zero. And that means an acknowledgement that they want to inject some form of confidence as well as financial support into the economy to part compensate for the damage that the pandemic has done to the supply side of the economy as well as to the demand side of the economy. The Reserve Bank can, by appropriate cut in interest rates, support both sides, and of course that by itself will not be enough.
Yeah. Doc, we are in a second recession in 2 years. ESCOM is still wreaking havoc. Add to that toxic mix the national state of disaster that's been declared thanks to the coronavirus. Question is, will the punted 50 basis points that the economists out there are punting, will that be enough to shore up this economy?
Absolutely not. I think anything less than 1% would be a total misjudgment of the situation. In my view, an appropriate rate cut at this moment is 1.5% to 2%. And that is, on one side, to align our interest rates with the global interest rate patterns. The second one is to recognize that this economy is in recession and has been hit by domestic as well as international supply shocks. Therefore, my suggestion would be 1.5% to possibly 2% as a start, and then the Reserve Bank at the same time needs to coordinate with the banking sector in order to go beyond rate cuts, to look at terms and conditions that the banks have in usual times in terms of credit management and credit provision, and that takes us to not just interest rate and price of credit change, but also terms and conditions in a targeted way. And I emphasize that it is important that the banking sector targets the most vulnerable and most affected supply side of the economy.
Doc, I've got to tell you, you're getting us all excited here. You're talking about a possible 2% in your view. I mean, imagine that. That would be good news, especially for people who are paying bonds. How disruptive will the coronavirus measures be to economic recovery, Dr. Iraj Abedian? And I say this also in mind with the possible downgrade by the ratings agencies that is on the cards, or do you think that is actually going to be put on hold?
That, I think, whether it's put on hold or not is Moody's decision, but at the moment it's totally irrelevant because the norms have been disrupted. The supply side of the economy globally and everywhere just about is totally out of ordinary, and the damage is substantial. The damage is to the point that all governments, including our governments, on a daily basis force the economy not to produce, not to engage, which means shutting down sections of the economy. For example, our tourism section, not just in South Africa, globally, is almost shut down. And all the related industries such as logistics, such as airlines, etc., etc. And increasingly, it's going to cascade to other industries. And the multiplier effect of that is that roughly about 1/3 to 40% of the global supply has been force majeure shut down. Now, this is very unusual. This we have not had for over 100 years, that governments go out of their way to shut the economy down because they have to, because of the public health sector.
Yeah.
Therefore, we cannot apply normal measures and normal policies to abnormal and totally unknown and disruptive conditions. And the Reserve Banks, our Reserve Bank, hopefully will fully recognize and take measures accordingly.
Dr. Iraj Abedian, thank you very much for your time. Imagine a 200 basis points cut to the interest rates. I mean, it's just music to my ears. But that's Dr. Iraj Abedian's expectations of the governor. Let's see what he's going to do.